Welcome back, everyone. Episode 10 of Making Sense of Your Money. As you can probably figure out already, we do not have Elizabeth with us today. Elizabeth has given birth. She is taking some well-deserved maternity leave. So we have a special guest today, Shelly Brockman. She is the Education Associate at Potomac Fund Management. It's one of our product partners. And, we brought her on today to talk about a little bit about risk. So in our last episode of Retirement Red Zone, the podcast I do by myself, I mentioned the term maximum drawdown. Shelly, can you take us through exactly what maximum drawdown means?
Yeah, absolutely, Jeff. And thanks so much for asking me to participate. Elizabeth has big shoes to fill, and I'm not attempting to do so, but I'm glad to be part of the conversation. So in its simplest terms, max drawdown is a measure of risk. It basically tells you the maximum decline that a particular strategy or investment has had in a given period of time. So as a point of reference, the S&P 500, which we know is a standard benchmark for US stocks, has a maximum drawdown of a little over 50%. And so that's a good number to know as you're making investment decisions moving forward.
So why is maximum drawdown an important metric? Can you talk us through why that's used or why you use it and kind of go into that a little bit?
Yeah, so I think first and foremost, it's all about engaging the client in the total investing experience. And the nature of investing, of course, is the ebbs and flows. Markets go up, they go down, rinse and repeat over time. So psychologically, we know that it hurts a lot more when we're losing money in our portfolios. And in fact, the ratio is that the studies show 3 times more painful for losing $1 than it is the joy and excitement that you feel from gaining $1 or gaining $1 in an investment. So this makes maximum drawdown important because when you can quantify that number, that drawdown, it's essentially a threshold for risk tolerance and the amount that a particular investor is willing to endure. And so it tells us a lot about how we should be allocating a client, how we should be investing, how to set expectations, both on the risk and return side, because you can't have one without the other.
Sure. So that does make a lot of sense. Can you walk us through, with Potomac being a tactical manager, what exactly tactical investing is?
Yeah. So I think maximum drawdown is your way of measuring risk. Tactical investing is a way of managing risk. And so for tactical investing, for all intents and purposes, is essentially just an active approach to portfolio management, has the flexibility to invest anywhere. So stocks, bonds, cash, commodities, and it can go anywhere, anytime based on market conditions. And so you use a subset of indicators or a composite of market indicators that essentially guide that process.
Okay. Can you talk through a couple of the indicators that might be used in a decision? I can understand that many strategies are probably using a lot of different indicators, but maybe just a few of the broad indicators that are used to make some decisions on that?
For sure. So as portfolio managers and investment research people, we all have access to the same information. It's just how you compile and interpret that information. And so the basis of what we do is called intermarket analysis. And within this areas of study, you'll find things like market breadth. So how many stocks are participating in a market movement? Is it the vast majority that are all either in an uptrend or a downtrend, or are there just a very few, what I like to call loudmouths out there? They're kind of the ones beating their chest the loudest, but it's not the majority, it's the minority. So breadth is important to look at. Another thing that we look at is the volume. So what is the total amount of transactions that are happening in the market? And you look at that in relation to prices. So higher prices, higher volume, that's typically a good signal of optimism in the market, meaning everybody's kind of saying, all right, let's get in. Prices are moving higher. And, we anticipate that that's the near-term direction.
That's really cool. Yeah. Like Shelly said, there's a lot of technical analysis that goes on behind the scenes there, but I'm glad you're able to give us some broad strokes there.
Yeah, so, and I'll elaborate real quickly, Jeff. Yeah. Sorry to jump in, but as you said, there's not one indicator that's going to signal a trade. And it's the compilation and how you kind of mix the recipe together that has us answering a very important question to begin with. You asked about what is tactical investing. Well, it's the flexibility to move. The one question we're trying to answer with our research is, should we be invested? Yes or no?
Yeah.
And then everything filters from there.
And that's kind of what it boils down to. And now you've got to have all the ingredients to get to that end result.
That's right. That's right. Exactly right.
So how can tactical management add value in times like this, where we're seeing, the start of 2022, a very volatile time, but although a very short period of time so far, how can that strategy add value?
So you bring up such a good point with short period of time, right? The thing with tactical investing, and again, it comes back to setting the expectations for the clients. So at least from our point of view, we look at tactical portfolio management as a way to, it's designed to sidestep those major market catastrophic loss. So like that 50% drawdown on the S&P 500. And so from anyone's point of view, you never know where that 5% decline is going to turn to 10, it's going to turn to 20. Is it going to turn to something worse? Or is it the typical, like I said, the ebbs and flows of the markets that just happens over time? So there's not a single strategy that's going to be able to time the market perfectly. And I want to give kudos and props to you and Elizabeth for your compilation of managers that you put together and strategies, because it provides that diversity to the process. And everybody's got their own job to do, right? You plug Potomac in for a specific reason, and you've got other managers that you plug in for a specific reason. So I think that to your credit, you guys do a really good job of pairing up managers that can work very nicely and complement each other nicely.
Well, thank you. I really appreciate that. So I wanted to keep this brief today. I'm sure that we'll probably have you back on for some follow-up here. So, we won't be seeing Elizabeth for a few more months. So we can maybe have you on the hot seat just one or two more times here. But if you have any questions, please reach out to me. Please schedule an appointment through our Calendly link. Check out my YouTube channel. And as always, go Bills.